Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. Today, let's look at cryptocurrencies as they start to bleed out past their critical support levels of this bear market. Now, we're going to reference this over the top of Wyckoff method, well, the Wyckoff method. If smart money, if a lot of investors are selling cryptos, when is a safe time to buy Bitcoin? Or more so, when is the safest time to be buying Bitcoin? And in most cases, people are not going to like the answer, or at least the people that were here in the bull markets, because the common belief is that you have to buy the low and sell the top. But I'm sure you guys that have been here for quite some time know that this is not the case. It's almost impossible to do. But really, the main thing we want to do is make profits. And so we don't need to buy this exact low. And I'm sure there are a lot of people who said they bought the exact low. Okay. And nor do we need to sell this exact top. Of course, that is the most amount of profits that you could have made in that entire run. But our point is to take a large chunk of profits out of the middle of the market, and that's it. The profits, the money, it doesn't matter where it came from. It just matters that you made profits, and you can go away and buy whatever crap it is you want to buy, or live that life that you want to live. Put that money towards a house or getting more time so you can spend it with your family and loved ones. Speaking of which, you want to spend more time with yours truly here online, smash up that subscribe button. Beautiful segue, I think. And hit that bell notification icon and all so that you see it pop up on your delicious iPhones over there. Make sure you smash up the likes as well so you can let YouTube know you want to see this. Today, we are looking at the Wyckoff schematic, the best times to get in, because this has been a big question coming up, especially with Bitcoin grinding around at these lower prices. When is a good time to be getting in? And that's specifically what I want to look at for Bitcoin and major cryptocurrencies, with live examples of how not to get wrecked out there. And then, of course, when those times are to get in. Now, I've seen this question a lot out in the community, as I said, because altcoins seem like they're the best time to be buying at these lows. And it also came from our TIA premium community, from JC here, asking, when in the schematic, so the Wyckoff schematic, do you suggest is the best buying zone if we presume we're in an accumulation phase? Now, if you want to become a part of our TIA premium, the price is going up soon. If you want to save yourself sort of 30-40%, definitely check out the link in the top of the video description. Now, there's tons of stuff in there, including a specific Wyckoff course that explains how to read the volume and how to put it into play for your own trading and investing. On with the show, and we are looking at cryptocurrencies as they're being sold off and dropped by investors. And we can see that here in the last 24 hours, the last 7 days, and of course, the entire bear market since their peaks. So none of this is my opinion. We're just looking at the data from crypto coin market cap, and of course the charts as well. So we want to figure out where those points are. Now, the top 5, they've held up relatively well. Of course, 2 of those are stable coins, and Bitcoin and ETH just doing their thing here, with BNB also not shedding too much. But we start to get out of that top 5, and you got the losses starting to creep up. 4% in the last 24 hours, nearly 10% there for XRP. Cardano, 10% in the last 7 days, 4%, 4% Solana, 6% Matic, 5% Polkadot, and you can sort of just go down the list and you start to see some reasonably bigger numbers here as it starts to creep up. Now, it's nothing huge. I know I can hear at the other end. This is crypto. Things go 20, 40, 60% down, and this is just the beginning. I do understand that. But some of these, in terms of their critical structures, in terms of where they are, which we'll look at in just a sec, for things like ADA and SOL in particular, they're starting to break down from key levels. And when they break down from key levels, they generally drop pretty quickly to the next key level. And so to save money, to not be blowing it on all of these ridiculous shit coins, this is a really important schematic to understand and look at where the best times, or the safest times to be getting in, so that you don't blow a lot more money. Because I know all of us want to be buying that dip and say we bought 2-cent ADA and sold it at $3 at the top, but looking at risk and reward, that really isn't the case. So this is the chart of ADA, and you can see it just start to break down here. I've posted this for a long time on the channel. I've been called all sorts of things when it comes to ADA. Stop fudding it. You hate it, blah, blah, blah. And I'm sure there's going to be more in the comment section. You missed this, that, the other. Honestly, it doesn't matter. What matters is, am I losing money in the market or am I making money in the market? And that's up to me. And the same deal for you guys as well. Who gives a flying F what some sort of ADA maxi or BTC maxi, whoever maxi it is online says, especially on Twitter. It's mostly just bloody anonymous people anyway that just that are maxis. Anyway, that's my rant over here because we need to get on with the real deal. And I've got here final capitulation zone. I posted this on Twitter a while ago. This is an update for this morning as ADA starts to drop through this level. So what we're first doing is understanding these zones and what they are when it's like from an accumulation or a distribution, or in this case, a redistribution. So ADA distributed at the top. It was distributing on the way down. You had a small little bounce here, which was pretty significant at the time, going from sort of 70 odd cents up to $1.20. But again, it led to lower prices. And this seems to be, now there's no 100% here, but this seems to be a redistribution area between sort of 38 and 40 cents. And then the tops here at about 58 to 66 cents. Now, I want to see a weekly close. So we've still got another 3 days here to confirm this. We would have had 2 weeks then closing underneath this level. Provided ADA doesn't just jump up and get back above 38 cents, you could pretty much say that this was a redistribution. So these are the areas that we don't want to be buying into as a buy the dip. So where are the safest levels? That's what we're trying to work towards here so that we can identify the differences between the two different stages. Wyckoff talks about them here in terms of price cycles. So we have an oversold area and an overbought area. So one is an accumulation, one is a distribution, and essentially it's just marking the price up from the supply area. So the demand is greater than supply. So obviously there's heaps of people dropping ADA onto the market. The demand is not meeting that. The investors, the smart money, are not buying up this ADA to support the price and then push it higher. It's honestly as simple as that. It's got nothing to do with how often Charles Hoskinson comes online to give us his thoughts about the market, this, that, the other. It doesn't have anything to do with it on the other flip side. It's literally just, are people buying this or are they not? It's really, really that simple. And that's what we're trying to identify in the chart. And so when it gets to a distribution area, an overbought area, which is what we saw at the peaks, then the supply is greater than demand. There's not enough people here buying, and the price drops back down to those levels. So this is what Wyckoff found in his time. Of course, there's a lot more to it. This is what we want to find out today. If the smart money is dumping cryptos, when is the best time to be getting into the market? So the time to enter long orders is towards the end of the preparation for a price markup or bull market. And this is the accumulation of large lines of stock or crypto, whatever it is that you're trading. That's what you want to have a look at. The flip side is, while the time to initiate short positions or, of course, sell out for profits, hopefully, and basically just get out of your positions, is at the end of the preparation for price markdown. So that's essentially all he's talking about is this area when you start to see those signals that it's time to break down. And so if we go back to ADA again, let's go back to when the best time to get into ADA was and the safest time. And like I said, it's not going to be something that people are going to like, because they will say, well, you should have got in earlier. And yes, you can potentially get in earlier. And I'll talk about that, especially along the lines of Bitcoin, is where I like to get into those cryptocurrencies at the lowest area possible. But talking about the safest, what we want to do is look back on the chart. So look left to see what the money was doing in the past and just look at key support and resistance levels. And then as those areas broke out, they're going to be the key levels to get into the market. Pretty straightforward stuff. But if you can't identify those levels, then it makes it a lot more difficult to be able to get into the market at a safe point. And even if you're getting into the market at as close as you can to the low, sometimes it can be quite nerve-wracking if you haven't understood what those levels mean and picking them right. So some people could be trying to get into the market. You can see the market bounce up and break out of, say, this zone right here. So let's put a little line across this. We're going back to ADA in 2018, 2019, and you got a bit of an accumulation here and the market breaks out to the upside. And yes, it forms another distribution because we know that after the fact where the market drops down and tries again to break out before we get the pandemic crash low and the market springs to new recent highs. So this wouldn't be a bad area to enter. You can see it sort of meets a lot of Wyckoff's criteria, which we've covered here before, looking at the schematics and the understandings of the chart. But you can see the market break out on a macro time frame on high volume, very, very high volume, considering what has happened in the past. And it breaks significant key levels. Remember on the weekly here, you could almost even go up to the monthly when the chart, when the market is quite dead and boring and tired. If it can break out of key levels, which we'll look at for Bitcoin, that is going to be a safer time to get in. But what we then risk is the downside. And so we look at the low to where the breakout level is, which is above this top. That's a 105% move. And yes, I hear people saying that is garbage. I don't want to wait for the 100%. But remember, what has happened here is the market has been going down, 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 down. And some people were buying these lows and then getting absolutely wrecked on the way down. They might have bought a breakout here, and then to the downside, they've lost 50%. To the next down, 63, 73. To the bottom here, they've lost 88%. And so we need to balance out where this safe area is to get in, and we treat it like an insurance plan. So an insurance you pay for every year, you might not use it, but you pay for it every year, whether it's for your car, your health, your home, whatever it is. And so that's essentially what we do when we look for these breakout areas, because the insurance is we're getting signals that more money is buying in, higher volume, and the breakouts of significant levels, et cetera, all the way to the upside. Now, I chose this specifically because you can see that the market broke down again. And the key thing here is that the market had a higher low from this level. So you could put your stops beneath the low here and wait to see if that is broken down or not. And unfortunately, for the case of ADA, it broke lower on the pandemic crash, but very, very quickly was bought back up. So for trading, this is what the professionals do. You could be selling out of your trades, waiting to see what happens and then get back in. People are going to say it's crazy, buy the low. It's like, well, how do you know where that low is? It could have been at 2.3 cents or 1.9 or in fact 1.7, right? But you just want to create the safest area possible. So going forward again, we're in, and then we could be sold out for this point. But we then get another signal to get back into the upside. You start to see these tops getting broken, and you see what I've got on my chart here, the horizontal lines. You can then re-enter on those charts. And yes, you take a loss. This is all part of the game, but you take a loss at the low levels and then enter back in at the low levels. And you see the market break out of these tops right here. And you have a test to the upside, a retest to the downside, and then the market breaks higher again on increasing volume as it breaks the tops, and the swings, the ranges get bigger and bigger, meaning more and more money is coming in, which means, going back to Wyckoff here, the time to enter longs is towards the end of the preparation zone. And so when we look at it in terms of time, this looks far more practical entering towards the end of this time than it does early on, when you only have a few weeks to the upside here and then the breakout. So it just needed more time. Now, at the Wyckoff accumulation schematic 1, you can see just how similar it is to the ADA pattern before it breaks out. And without a doubt, phase E is the safest time to be getting into the market. And of course, from that point, the rest is history. The market went up from your sort of 9, 10, 17 cents and then broke all the way to $3. And so the reason why I've been talking a lot about ADA not being ready yet is primarily time. And we haven't broken any significant highs. Look at the Gann swing indicator. You can see the tops here. None of these tops were broken as they were in the first stage. So you still had a good trading range here. Of course, we got a higher low and then a quick pandemic crash before the market took off. But we haven't even had those first signs. So it was very straightforward that ADA is going to continue to break down until something like this forms. I am not trying to catch the bottom. I just want to get into a safe area to enter the market. One of them is potentially here. Yes, it takes a loss. This is part of trading and investing. And I wanted to show that because there is not a 100% guarantee. There are these sorts of things that come up. And then you get the breakout. The retest was much higher, didn't break any of these significant lows to the downside, and it stayed above the support, and then it takes off from that point. And so if we go across to Solana, you can start to see what's happening here. It is slightly stronger than ADA, but it is breaking down. So while crypto is going down, investors, smart money, etc., are more than likely selling their cryptos. That leads us to when is the time to be buying Bitcoin. I would argue that yes, it does or can look very similar to what's happening to Solana now. And of course, I've talked about the low being in here in June, and in the futures market, October had another significant low as well, or the low for the futures market on Bitcoin. but now we're just continuing to grind away. So this really needs to get back above that 19.5 to 20K level quite quickly in case we look to break down further and test lower prices. Hasn't happened yet. We're about 4 months in from this June low, very high volume. So we're looking at the safest time to be buying Bitcoin. And I'm sure now, going back from what we've looked at in cryptocurrencies, when is the safest time? Clearly, for now, the trading range to the top side is 25,200. The current bottom is 17,500. So if we're going to use that as an example, yes, it is a significant way from the 17.5K low. And how much is it? Well, up to bottom to top, 43%. The safest time would be to buy it on the breakout. As Wyckoff has mentioned many times before, that's the oversold area, and then you want to buy on the breakout when the markup is ready. Now, if you aren't prepared to wait for that breakout, which is when the fastest money is made, if you look back at all of these charts, every time you get the breakout of those zones, that's when the fastest money is made. Not the most money, but the fastest, because the percentages from the lower areas are obviously much bigger. But the fastest money is when you get a breakout of the accumulation zones. And so if you're willing to wait, it can be months and years, but you're going to get the fastest money. But if you're looking to buy those low levels, then have some rules like we've talked about here and we'll talk about in future videos. So you know what to do. Make sure you're subscribed with the bell notification icon. We talk about those specific levels to the downside as well, but you just have to be far more patient to get those bigger gains. So currently the safest area to be buying Bitcoin according to Wyckoff method is on the breakout of these key resistance levels to the upside. Now, if we throw it on a monthly chart, the key levels to the upside are still above that 25,200, which is our monthly swing top. Now, this can change. If this market breaks down and we fall into a zone between the 11-ish that I've talked about and then back to the underside of the 18K level or 17K level, then we might be forming another zone here, another swing top, and then we wait for the breakout to that upside, and that would then be the safest level to enter. So this is always readjusting, just like moving averages adjust, just like RSIs adjust. Everything is moving according to what the market data is giving us. So that's what we've got to wait for Bitcoin. So currently it is above that 25,200. Yes, it's going to be a lower percentage of a gain, but the main focus here was to look at the safest area, because although we're looking for a low to come in, it's not 100% confirmed until it breaks out of the accumulation zone. So if it does break down, then sure, we could get lower prices, which we've talked about here on the channel, and how to structure your plans and your money management leading into an event that, like this, that may occur. In Bitcoin's past, the safest levels to get into BTC, if you're one of the fastest areas, were above the pump, and then the next pump in August where you had that little top and the correction and then the move back above. And that level was approximately $12,000 to $14,000. And so that's why that number keeps coming up for a lot of people. Maybe we come back to test those higher prices there. But for now, market's holding up. That is the safest levels to be buying Bitcoin at this point in time. So make sure you are subscribed to the channel with bell notification on so you can stay up to date with any future levels that the market shows us. And of course, if you want to join us for the Wyckoff Volume Accelerator before the price increases, link is in the top of the video description. Make sure you use that. And of course, our exclusive trading workshop for our Bybit and BitGet customers over there. Use the links down below. If you already have accounts with them, make sure you start a new account with our link so you can be involved in this in due course. All right, guys, thanks once again. I'll see you at the next one. Otherwise, check out the videos that are popping up on your left-hand side right now. And until next time, peace out.